Welcome back to Dividend Obsession. I recently started a series on my channel called Dividend Discussion that's going to allow other dividend investors to tell their story. One of the goals of this series is to allow each of us to grow through the experiences and lessons of others to make us all better dividend investors. Now, if you're watching this video, this is just a short clip from the full interview, so if you enjoy it, make sure you click on the link at the end of this video for the full interview. What is the biggest dividend related mistake you made and what did you learn?
Yeah. So there's two of them. So one of them kind of goes back to the beginning. When I first started, I did not realize what dividends were. As I mentioned before, I didn't understand the power of them. And in my brokerage account, it did not have drip on. So the money for probably a few years was just accumulating in cash and not being reinvested into more shares. And so I missed out on probably 2 to 3 years worth of reinvestment and growth on my share count, because instead of it having it on drip and automatically being bought more shares, it was just sitting there. And that money was used to buy just random things that, like growth investing or like a random penny stock, that I came across. Like I didn't really understand what was going on. So that means my first mistake is not reinvesting the dividends at the beginning. The second and the more recent one is borrowing other people's conviction. So when you're buying individual companies, especially if you're active on social media, you see and hear 50 different tickers a day of people touting XYZ company and ABC, this company, that company. And you can get excited with it and you can get that fear of missing out, or you're like, oh, the earnings were great, hop in now, the dividend. But if you don't have the conviction to hold on to a stock when it goes down, you're missing the point, because this is a long-term game. You have to be willing to hold it for the long term to see that compounding, and you have to understand what you're buying. So there was one company, and I mentioned this on another call with someone else, is IIPR, Industrial Properties. It's the medical marijuana greenhouse REIT, which I like the industry. I think it's a future industry, but I really didn't have conviction on it. I bought it during like the weed hype, if you will. And obviously I bought it at a price that was unreasonable. And so it's down probably 50% right now. And it's not something that I would put more money into right now. And so that's my big takeaway, is you have to, one, know what you're getting into, understand the valuation, and really have conviction in the name in order to hold it for the long time, especially when there's a downturn. It's easy to hold a stock when things are going well, but when things aren't going well and you don't have conviction, you'll more than likely sell and then take the loss. Yep. So that would be my second one.
Yeah, and that's one thing I try to do with my videos on YouTube, especially with like the creating a criteria that you can understand yourself. Because that's really important. Like that's one thing I didn't have when I first started. I was just like, oh, like these are all household names, like your Targets and your Walmarts and your Verizons and AT&Ts and all the things. But like, I didn't have like, my stocks need to meet X, Y, and Z. And as long as they still meet X, Y, and Z, I still like those companies. And you can get as simple or complicated as you wish. Just as long as you know what you're looking for and that each of your stocks need to pass that criteria, that little checklist that you set yourself. I think that really helps, because that FOMO is real. My example of that is I just sold NVIDIA like Friday of last week. So here we are. Yeah, NVIDIA is up 25%, I think, after hours, which is good. Yeah. Like I bought NVIDIA because of the group that we're in on Facebook. I was, just got into the group. I heard a lot of people talking about NVIDIA and all their gains and stuff. I bought it. It went in the toilet because, of course, I know they were waiting for Troy to buy it, and then that's what happened. So I bought it. It went down. I dollar cost averaged. I got my cost basis under $200. And then it went up over 300. And then I was like, okay, like this doesn't, I only bought it because of the group. It doesn't meet my dividend growth rate history. It beats the market, but it doesn't meet the streak of increasing their dividend, because they don't. Their dividend's almost embarrassing. Like it's annoying that they pay 4 cents per share.
I don't even know why they do that.
Yeah, like just keep it. Like at that point, like they're just trying to capture the dividend group. That's what they're trying to do. They're just like, hey, if we pay a dividend, then it's a dividend payer and people will do it. So, but yeah, so they pay a 4 cent dividend and then they don't have a dividend. So their dividend growth rate and dividend streak is not quality, like my standards. So I was like, okay, I was up like 57% on it, which I would have been up way more. But I was like, all right, let me take my gains, and I ended up using it to buy Costco, which met all my criteria. So I was like, I
Mm-hmm.
don't think it's a loss, like it's an
No.
opportunity cost, but I think I made a good, like in the long term, I think it'll be an okay decision. So
Yeah, and you can't second guess yourself because who would have thought it would go up 25% on earnings in one day?
yeah,
If they would have missed their numbers, it could have gone down 20%. So
yeah,
you can't look back. You just have to, you made a profit, you put it into another very high quality company that met your needs, met your criteria, and then you just have to move forward. There've been plenty of ones that I sold too early and then moved on to something else, but you can't go back to it. So why stress about it?
yeah, yeah. I agree. So, okay. So next thing, actually, this kind of goes into that next thing. So your biggest selling regret or your biggest buying brag?
Oh man. Okay, so my regret is somewhat dividend related, but not really. So back a few years ago, there's a sector ETF for technology.
Mhm.
I think it's XLK or something like that. It's whatever the technology sector one is. I had bought it. The market tanked. I think it was around COVID, and I was, obviously down. I was like, okay, as soon as it gets back to even, I'm going to sell out, because again, to your point, it's not really what I'm focused on. It doesn't have a large dividend. It's more of a growth name. And so I ended up selling it at like $230 a share or something like that. And then of course, we all know what happened after COVID. The market went crazy
Yeah.
and it was like $350 per share. And of course I sold it at 230. So I didn't take a loss, but I missed out on all those gains. So that was my biggest regret, is not holding on to that, because I should have known that technology would have been just fine.
Yeah.
But I got scared. I was like, oh my goodness, let me just get out of this one. And so I missed out on the amount of shares I had. I probably missed out on $10,000 or $20,000 worth of
Oh,
gains.
yikes. That's
Yeah,
rough.
it was rough. So like again, as I said before, it hurt at the time, but at the end of the day, I made the decision. I had to live with the decision.
Mhm.
I moved on. I focused more on dividend stocks, and my dividend income grew with that money. So at the end of the day, it's not a bad thing, but obviously I could have made a lot more money
Mhm.
if I would have kept it on there. So that was that. My biggest brag, I have two. So my very favorite company, the one I like the most, is BlackRock,
Mhm.
ticker BLK. I bought that. God, it must have been in December 2018. There was a 1 month dip in the stock market. Everything tanked in December that year for some reason. It went down like 20% in a month, and I was just buying like crazy. And one of the names that I had picked was BlackRock, and I bought it extremely cheap, and it's up like 150% since I bought it. So that's
Nice.
definitely a good one. Another really big one that I did well on so far is Broadcom,
Mhm.
so AVGO. My cost base is like $290 and it's like 660 or something like that. So
Nice.
yeah.
I really hope you all enjoyed that clip. Please make sure you guys leave a like on the video as it helps me grow my channel. And don't forget to subscribe for dividend related content and other interviews. If you're interested in being added to the interview list, send me an email at dividendobsession@gmail.com and I'll be in touch. Again, this was just a short clip of the full interview. If you're interested in the full interview, check that out right here. But until next time, see ya.